Mel Rohr here with the RAM Group, and I wanted to take this opportunity to introduce you to our website. For those of you who have not logged in at www.rohrandassociates.com, you can do so, and you'll need to register before you'll be able to use any of these tools within the website. What I'd like to be able to do, though, is take you to a concept that we've been pretty excited about, and you're going to find it very unique in design and have a lot of flexible applications out there. If you'll go under Agent Tools and select IGO, and then once you're into IGO, it will load up, and again, you'll need to be registered to access this. And we'll go into IGO. And IGO stands for in good order. Now you can do illustrations and submit your applications right online with no client signatures through this system. But for today's purposes, we're going to take a look at a 20-pay whole life that has very unique features. And I'm just going to go through and show you how to load this up. First of all, once you get into the case information, I'm just going to go ahead and select this preloaded information. And from there we'll select the age of the client, and for the purposes of demonstration we're going to use a male and female aged 35, in this case husband and wife, and design a plan where they're all covered under one plan with some pretty unique features. We'll make that 1988, hopefully that makes them 35. And for the purpose of being able to design this with the lowest possible premium, I'm going to select the female as the primary insured. We're going to use the state of Wisconsin, and we're going to select whole life. Then we'll go over and select product. And in this case, we're going to be using one of our recent add-on carriers, but turning into one of our favorites. And we're going to select their 20-pay whole life. Once that's brought up, then we're going to go ahead and see where it's already populated the information that we'd already inputted, and we're going to select a face amount. In this case, we're going to select $75,000. And we've got this set up on a monthly EFT. Under the rate class, we're going to select actually, which is their preferred rating. And then we're going to go to riders, and here's where it gets pretty unique. You can see that the primary insured can have a 10, 20, or 30-year term rider, but in fact they can have all three of them on the same policy. So we're going to select the 10-year. And as you can see, the minimum amount is $250,000, so we'll add the $250,000. Then we'll select the 20-year, and in that case, we're going to select 100. Let's get that in there. We're going to select 175,000, and then the third one we'll select 100,000. Oops. Better add a 0. Now, if you'll take a look down here, you can add an additional insured. Now, that does not have to be husband and wife. It can be a business partner, as an example. In this case, it is husband and wife. So we're going to go ahead and select in the 10-year. We'll go ahead and put the information. In this case, we're going to put Mr. because the spouse, the female, was the primary insured. And so we're going to select male. And again, we're going to make him, hopefully, 35 years old. And again, we're going to select, which is their preferred rate. And for the 10-year, we're going to put in there the minimum requirement is $250,000 again. And then under the 20-year, we'll select $150,000. And then on the 30-year, we'll select $100,000. Obviously, you can design this however you want and whatever the client's needs are, so there's plenty of flexibility here. I'm just using this particular scenario as an example. And I think we got pretty much everything that we need in there. Let's go ahead and hit next. And we're going to illustrate. So here we are, we've got the illustration. And the first page that I want to show you is the term and permanent coverage scenario. So you can see what we have here. We have a total death benefit amount on the primary insured, the female 35, of $600,000. And that has a base amount of $75,000 for the 20-pay whole life, which is a premium of $1,448.25. Here's where it gets pretty interesting. So on the $250,000 for the 10-year term, you can see that the rate is only $75 per year. The 20-year, $175,000 is only $96.25, and the 30-year for the $100,000 is only $107. I know nowhere in the industry where you can get term rates this inexpensive. They're significantly lower than anybody else on the street. If you take a look at the rider that we put on for the other insured, 35-year-old, for the 10-year, the 250 is only $90 per year. The 20-year for 150,000 is only $102 per year, and the 30-year 100,000 is only $135. So as you can see, our premium rate is $2,128.50 for a total of $177.32. So now, if we take a look down, if we toggle down, and we can take a look at, we have a dividend option because they are participating whole life product, and CFL, the Catholic Financial Life Insurance Company, is a fraternal out of Madison, Wisconsin. This product also includes a living benefit for long-term care. And we'll just go down to the ledger page so we can take a look to see what's going on here. As you can see, that our coverage for the first 10 years with a premium of $21.27 per year, then it drops down because the 10-year drops off, and then the death benefit drops down accordingly. Then once we hit the 20th year, the premium again drops down to $241 because both the insured still have coverage of $100,000 in addition to the base $75 for the primary insured. But let's take a look what's going on with this. At the end of 20 years, there's $31,940 or $31,042 of cash value. They paid in $40,000, so the net cost was about $9,000 for that first 20 years. They continued to pay the premiums, and let's take a look what happens at the end of the 30 years. They had paid in $43,326, but look at the cash value, $47,176. And if we take a look at year 31, now remember the primary insured being the female 35, had a $75,000 policy, but look here, the cash and the death benefit continues to grow, and the death benefit is now over $100,000. It's in fact $103,000 and change. But you can see that the death benefit continues to grow, as does the cash value. So in essence, this is a return of premium designed with lots of flexibility, and the client has the option of taking the cash out or continuing on with the paid up insurance, or if the client wanted to, remember that this premium dropped way down to $1,962. Well, the other insured could have in fact converted part of his death benefit and used that $1,900 to pay his premium that went away, and now in 20 years he could have a paid up policy. So that's pretty unique. So at the end of the day, this policy continues on to age 121 and grows to over $200,000. I don't know of another product that remotely compares to this. So I wanted to take the opportunity to share this with you. And if you have a case design out there that you would like to see in specific, we'd be happy to give you the assistance and walk you through it. Good luck with it. And our number is 800-686-4238.